for the next week. Break 335. Let's see, 360, 363, 390. Hello, everybody. Welcome. Okay. Let me drop out this Discord group for a minute. Well, let's see. What is it? 287. I mean, you could go as low as like 270s. Yep. Good morning. Good morning. I mean, this looks okay for GME this morning. I was trading a couple other tickers early. The FANG was the biggest winner today. I'm talking about this for a while, and I had said that I thought it was going to come up to near 160s by about this week or next week. I had some ideas about what that might look like, and it didn't end up making any kind of a pullback. It just kind of peaked over the top. So for me, the two big winners this week were Starbucks early in the week, like Monday, and then FANG on Friday. I got that 95 hit on Starbucks, and then FANG has this really nice second pump here. You know, obviously I'm not happy that it comes on the back of Middle Eastern conflict. That's not really like what I want to have happen, but it is a American-based oil, producer. So when you look at the situation in the Middle East and there's any kind of concern about oil prices and they start surging, this benefits American producers more. Even though it might seem like the opposite, because you think that that might be a problem, it actually does better for them. They can't make good profit if the oil prices are too low. It's not worth drilling. So they stand to benefit a lot from that kind of a maybe a hitch with Middle Eastern oil, even if prices are going up. It's actually kind of a good thing. So I think that on the whole, this trade was really good. I had no real expectations that it was going to go as high as it did, as quickly as it did, beyond just that I had that 160 call. I bought that back here after the breakout when it was down around 130, I mean, I really got a great entry on this. The most surprising thing about this play was the exit, because I got a really, really good exit. And I gotta say, man, I can't really take credit for it. I think in this particular case, Fidelity, I used Fidelity. They knocked it out of the park. I mean, credit where credit's due. So the bid and the ask were pretty far spread, and I bought them for like 30 cents a piece. And this is kind of incredible to me. I bought them for like 30 cents a piece and 35, down to 30 or something. I had a few different ones. But I was trying to get out this morning, and the bid was between 60 cents and 90 cents. And the ask was way too high. It was like $3. And I'm like, well, that's not going to hit. So I decided that I would just go for the bid, or like somewhere slightly above it. So I hit the 90-cent one, and I got a bid order fill for $2.07, which is insane. And it was right at the tip top. I mean, it could not have been any more perfect. So the timing was there on my part, but I was like, oh, I saw it flick up to 90 cents. And I was like, I'm just going to hit 90 cents. That's a great trade. 3-cent, 34-cent cost average to 90 cents is wonderful. And then all of a sudden it was like, oh, they got it matched with a $2. I'm like, that's what? Like, I didn't ask for that. So just really, I know it's like, I guess I just don't, I feel like it's important maybe just to give credit where credit's due. That's an incredible fill. And it really, a large part of it is timing. I mean, I hit the top. I couldn't have been any better. It literally went down like right afterwards. But I honestly have to give credit to Fidelity, because that's an incredible, fill. I just couldn't believe it. So, I put down $200 on that. I made $1,200 on it. Like, that's as simple as it was. Like, it was literally a 430% gain on that. And that's a really great trade. And I'm saying, like, I just think that that's pretty amazing. And I would never ever pump like a particular broker or something. I rarely ever talk about it, but to me that was like, wow, thank you. Because that was a great fill. I don't even know how that happened. So yeah, Starbucks early in the week, pretty big gains on that. And then FANG today. That being said, I was eyeballing this CMBM that was recommended, and it did drop down. It didn't actually hit my trigger, so it only went down to like 33 cents. But I went ahead and got some at 34, and it's up to 35. I don't think it's impossible that this could come down again. You can see this is certainly possibly like a distribution. If this is like a sign of weakness and a hook, it could certainly drop again. But I'm like eyeballing this RSI, and I was thinking, it's gotten pretty far extended. At this point, if it comes back and it holds above, I think it's going to go. And again, this is not one that I think is like a huge play, but it's one that I think has some serious potential, possibly going all the way up to near 45 cents. So, as far as penny stocks go, this is a good 25% trade or so. I didn't put a ton of money on it, so I'm not like hoping for the moon or anything. But again, simple enough in my opinion. I think this could be it. It did drop, obviously, this creek, but I'm looking at this lower body like, I don't know, it came pretty close. They may go back down, but it's really right on the cusp of where I wanted it. So I made a judgment call this morning when I saw it drop that I just figured I'd just go ahead and try it out. And again, it could come down again, and I wouldn't be surprised if it came back down to 33 or 32 cents. I think that's pretty much where my stop is. I wouldn't let it drop farther than that. If it kept going, I'd probably just get out and wait for a breakout. Some others, it didn't do so well, didn't do too hot this morning. Like AMD had a really steep pullback. This wasn't out of the question. I mean, I had it coming back down, I think originally to the same area. I was thinking that might have already happened, here, but this is just kind of a backup. bit of a widening spread now. So, if it goes up again, certainly it could go higher, go to like 127 or something if it came back up. But again, that's sort of like the tippy top of where I was going anyways. I wasn't expecting it to go way beyond this wall here unless it makes like a deeper pullback. So for now, kind of a mixed bag. As far as a wave count goes, it didn't make it to what would be considered like a normal, perhaps like a normal fifth wave. And I am going to talk about GME. It looks good this morning. I'll talk about that in a minute. But just kind of going through the motions here. So I would still have expected, if this is the low, that we see maybe up to near 140 on AMD. There's a widening here that definitely broke out, and I don't see why you wouldn't go back up to that 140 mark at some point. The question really is, does it hold here? Does it go lower? I'm not really concerned about it at the moment. I still don't think the market, even though we had this nasty sell-off, I still don't think it's done. I know there's divergence here. I recognize that that's like a negative sign. I'm in agreement with that. But I'm thinking that what happens is that we go up on what I would say is a weakness. So the RSI doesn't really build out the way you might expect, and we go up on weakness. That's a bit of a stretch. I know it isn't. I got to be careful because it isn't exactly what the chart shows. You've got some argument there for sure that you could make against that opinion. But like the S&P 500, we were talking about the potential for it to come down low. We were talking about that on Wednesday. And then instead it chops high. It actually built out support over this creek. It's kind of surprising how it looks like both, and this is weird because this is actually where I left it, the marker. I mean, I left it right there. It looks like both. It kind of went up above and then it dropped back below. That's normally not the greatest thing ever, but remember when we did this the other day, we talked about the SOW right here on this build out, and it seems to me that this was kind of baked in, that it would come back down to this level. So there's still some question marks, like is it going to drop again, so on and so forth? Is this going to just like hook and dump? But remember, on the previous drops here, and there have been some really steep pullbacks, they're not all bad, right? You have some that have taken a little bit longer, have lingered low, maybe taken a few days to break back out. I was making a case that I think this is iterative and that this build out here is the same as the previous one here. But what's worth noting is that the previous one actually, even though the RSI is weak, and it is, you can see it very clearly, that on the first build out here, the RSI is actually significantly weaker on the 1 hour. It's staying really low, that the price is still coming up above the top and extending over the top. That's an acceleration on weakness. So there's nothing like long term that's very bullish about that kind of price action. But I do think that it's very similar to what we maybe will experience here, is that once you get that drop, depending on how low it goes, all that jazz, I think you could still even have a build out. I don't know if it would stay below the 50 here, but my thought is it probably accelerates, which is more typical. So what I mean is if you look at the baseline here, these guys look fairly similar. Like they look like they're basically going the same way. But if you look and focus on that hook right here, which is the breakdown, which is like the fake out, that actually is accelerating. So this gives me an idea that there was probably going to be a pinnacle point coming up where that acceleration kind of catches up with the market and it essentially dies from there. So what I'm thinking is that this build out is actually more directive of some other termination target. Again, maybe it's July. I've been saying the 11th, but it's really like Wednesday the 9th. I'm not really sure why I said the 11th. I think I just counted the days, but it probably wasn't including certain things. Like I don't know how I did it wrong, but I did it wrong by like 2 days. As I saw the headline, I went and clicked it, and I was like, oh, it's the 9th. It's not the 11th, but close enough. So this is probably what's in view here in terms of like where we stop. It looks to me like again, this is an hourly chart, but it would look to me like this is kind of the same hooking motion here. And I would say that this seems very likely it's going out towards that Monday. Again, doesn't necessarily mean it's going to go up that entire time. That's not what I'm saying. Doesn't mean it couldn't have deeper pullbacks. But it would not surprise me, I should say, if this advancement has a similar motion to the upside and we get that cross. I was talking about that the other day, like this could be like a wave here. I just deleted it, but this is like a wave right here. And so I genuinely think it's going to go up. I know that sounds a little backwards. This is just my opinion based on what I'm seeing in the wave patterns and all that. I understand it looks kind of bearish. I understand that a lot of the indicators have flipped bearish. Don't get me wrong. You shouldn't just trade because Booksy has a feeling about it. But I think that there's a good chance that this actually still builds back out again. And again, I don't know if this is the end or if it's going to come down a little bit more. But I'm thinking by Monday. I was saying on Wednesday that I thought this might pump back up about Monday. So I'm expecting this to kind of rally up and sort of come into a pinch point. Probably does it well before then. But for now, this is kind of where I'm going to sit and hang my hat. If I look at this creek jump right here, I think you would have an argument that that wave here is probably done because that to me looks like, yeah, it's Monday. Yeah, it is Monday. That looks like the final up would maybe be Monday. So if that's the case, this is really short-lived, right? This is your wave cross. I don't know, man. You could look at it as a wave cross with this being a kind of a peak, or you could look at it as a wave cross with this being like an S-curve, which seems pretty reasonable. That the S-curve would be finished Monday. Well, that results in then a new action, especially if it comes back and finds a support, it's going to bounce. So again, I think there's plenty of evidence that that is the case here, that we've got a bit of an S-curve coming down, and then the price action is going up. Again, is that bullish or bearish? It's bearish divergence, right? Because it's ultimately like chopping low. There's a possibility, depending on how those bottoms form, that's like a hidden divergence, but that's a little different. Okay, we're really focusing on those tops. It's very bearish looking. Bottoms could be a little bit different. I'm not really looking at that right now, so don't take my word for that. If you find some hidden divergence, it wouldn't surprise me in there. But I think for now, that's probably the motion, you know. So I'm seeing this as a very positive sign that this particular action may be done. And again, not saying it's going to go to the moon, but it would not surprise me to see it kind of do the same thing and have this kind of like 1, 2, 3 rapid fire push up kind of motion to get you into overbought territory again, perhaps. And we'll see from there. And then I think you're in a bit of a crappy spot, probably. Like, just quite frankly, it wouldn't even surprise me if this one's pretty high and this one's kind of like that, like sort of a head and shoulder. I would expect at that point that the corrections could be quite massive, you know. And this is where we get to stuff where you start seeing what I would call like a slingshot, where it is going to do one more, but it's really ugly. And ultimately, like, this may not result in the expected outcome anyways. Like, it may not go way to the moon, you know. This could be like the pivot on the low that does break out, but it ultimately doesn't go that high. So we don't know yet. That's too far in advance. I'd have to sort of redraw the chart at that point. So my expectation is that this is done Monday, and we're probably going to see a final leg up towards the top. I know it would be on weakness. It would be a bit contrary. I get it. I don't know the news. I don't know if something crappy happens, you know, besides what's already going on. So there's a lot of stuff here that's like questionable, but this is what I think we're likely going to see. Okay. Yeah. I'm not going to play anything this weekend on it because I don't have really a lot of cash to play on right this second. I just made a big trade. I'll have some stuff next week. So for some reason, this is down low Monday, I'll probably be a buyer. Otherwise, I think I'm just gonna like ride it out and let it do what it's gonna do, and just trade what I already have, and not worry about the S&P, for example. So that 603 gap certainly calling our name, but we've had gaps below anyways that for a while, and now we're sort of situating really right between them. If you look at the closing values here, we're sort of sitting right in between those two gaps, so pretty much on the nose. Anyways, easy enough call out there, and I think we got it. It's just weird because it went up first and it looked like it was holding the creek. It was a really good bull trap, to be honest. Aside from the RSI being kind of janky, and it was on this downturn. So that being said, remember, like, these are important markers, and like you should pay attention to them. We marked it off according to certain things yesterday. But really that 594 and then 587 level were the two big ones for me. I think that kind of encapsulates where that divergence began, where this waveform may go if it drops really hard. So worst case scenario, yeah, you could have a pretty nasty drop down there. Just this high liquidity zone around 589 looks pretty attractive. If you drop through the 595, it would probably move pretty fast, like good $6 move. So again, I'm not saying it can't go lower. Don't hear me wrong. I'm just saying that there is an S-curve that kind of terminates Monday. We'll see what happens. FANG was my entry, 134. That's a good entry. I can exit 250. I bought a few different times on FANG, but my average is kind of all over the place because of the I bought like down here and then I sold and then bought again and yada yada yada. So I'm about the same. This is a good place to have this 134 137 area right here. This is a solid floor for now. So I don't see that as a problem for shares. It looks like a good place. This is where the turnaround happened. Is it possible it comes back down to like 138 or something? Yeah, I mean it's possible. There was a jump back here that I would say did not really get checked. It's pretty low, that one. But really I'm looking at this guy right here. So this is one that you may have to watch for in the future. And certainly if this forms like a longer term range, there's chinks in the armor, maybe a little bit on volume. It just flipped bullish on the daily, not even like a week ago on the MACD here. And previously it's had some trouble with this daily moving average, which is where it's at right now. So if it rejects at 156, I'm going to say this is and this ended up being really quite nice. Yeah, it's pretty close. So yearly sell-off area here, yearly buy-in area here, looks pretty good. The next wave down is usually in this pocket around September. So it's debatable. Performance is not year over year the same, but you can see this is a big widening. So if it has some trouble here, I would definitely see it in this pocket region, maybe some issues. I think you could have some potential for chop in this region right here, going into the next earnings, world events, so on and so forth. And then this brings up the question of like, I don't know what happens right here, if it goes up or not, but it brings up the question of, does it go down for like another bottom? Where would it go? There's a long-standing widening / weakness right there, but we already kind of jumped over it. That's what I'm saying. I think that 135 is a very strong region. I honestly think if it goes through that again, it's probably a big buy opportunity. I would guess that it does something like this if it did that. And then I think you're going to look at a potential area where you start selling off near September. I'd have to go back and double check that yearly thing. I marked this off, but I actually can't tell where that is exactly. I think I marked it off here in October. But that would imply that you're going to have maybe some downside if this did make a way up. So this is just me doodling. I don't know for a fact it's going to break any of these, but I would suggest that if it did, you could still have a pretty decent bullish move. I hate to say it's coming out of August again, but it really does seem like August is going to be a very important time for the market. So, yeah. So this wouldn't shock or surprise me very much if something like this occurred. It's a better long-term play. It's not a great options play. I told you guys I made a good bunch of money on options today, but like I said, it's more about the fill that I got, less about the actual trade, because the other times I've traded it, it's got a pretty weak options chain. Sometimes it's very dry. You know, you got to be really careful when you're picking on there, because it won't always kind of play out the way you think. That looks like a double bottom. Low of 309, low of 309. Okay. And then we know that the that might be the 786 level, because the 786 and 854 are right around here, the bigger retracement. There's a weird gap, and I don't think it's gonna. I mean, unfortunately, I don't think that's going to be left open. I think it's pretty unlikely, actually, that gets left open. So you can see that jump here. And then going forward, I mean, it'd be surprising if it didn't come back down today. So I mean, you might get a move up. That's not. We've already made a higher high. That's fine. At any rate, at this point, you could go up to the top. I'd prefer to not go above 324 until we're ready. So I'd prefer to see it kind of meander and then maybe come down around midday. Maybe a little higher and then come down around midday. And honestly, it'd be nice if it went ahead and filled that gap. Maybe caught that creek a little bit. And then going into Monday, we would have a better setup if it can make a bottom here. Again, there's no telling. I mean, Monday could still be kind of red, at least off the bat, you know, off the start. Especially if it doesn't get that low today, you could see something like this. It seems likely. I left it open. This is a good buy-in, by the way. There's a good amount of volume on the bottom area, and then it's like lowering as it goes up. That's actually good, though. That's better. You don't want to see like that really high ramp up into a peak. Not right here, especially if it stays low. That's going to be longer term, much more bullish going into next week. So this would be ideal to me for AMC today. I'm kind of keeping it simple. This would be very ideal. Yeah, I don't really want it to push above 324. Not yet. But I guess we'll see what happens. So this would look good to me. I know that it's kind of ugly. You probably want to just see it go up. Why not just rock it? Well, enter GME. It's a similar situation. Weird day yesterday, right? I don't know if you guys saw the end of the day. Very strange price action. I mean, on the one hand, if you're following closely, this was pretty obviously going to explode to the upside because it was like barcoding for 30 minutes or more. I mean, it was a long time. This was, about 35 minutes or so, just sideways at 2154 or something like that. But it basically did not jump here, which we thought it might not. It came back down, and when it broke low, it just kept going. So it didn't have any kind of rebound. We already knew that there was an SOW, so I had that drawn out, and I left it alone. And when I came back later, I was genuinely surprised to see it do this. This is really weird. So here's my thoughts on this, and I don't want to get too crazy about anything in particular today, but there's a pattern of iteration here that's actually quite positive. So there's this bounce out that happens and it drops low, right? Okay. Now I'm not going to zoom in on this necessarily. I'm I don't necessarily think everything is a shrinking iteration. I don't. But when the price action does this kind of stuff and it starts turning this kind of weird barcoding where it looks like it's repeating. I mean, these literal bars here are like 1, 2, 3, 4, 5, 6. It's like 3 of the same thing over and over. And then you've got this really tiny, itty bitty, microscopic looking fractal on the bottom. I can't help but think that that's probably what's going on, because that's not something that I see unless I'm tracking iterations. Like, and I regularly have seen it with those iteration trackings. I don't see it anywhere else. So this kind of nonsense right here is what I'm talking about. This is very odd. Very, very odd. Totally normal, right? Look at that. That's crazy, right? That's some crazy price action. You compare that to like everything else around it, and you can tell why that's just very unusual. It's not like this trades this way all the time. It just doesn't. This is a 1 minute chart on the left and the right? I mean, it's not any different time frame wise. This is just bonkers, right? This is a goofy looking setup. So when I see stuff like that, I tend to think that what's probably going on, in addition to obviously kind of walking it down to this level, and then this was just absurd, is probably something of an iteration repeat, because that, again, that typically doesn't happen unless you're kind of forcing it into a particular corner, whether up or down. So there's good news here. And the good news is that we have this really high volume bottom now, potentially. And I'm going to talk about that little high that was made. And I know that we talked a lot about bad news yesterday. That bad news is still there. It's not gone. It's not like suddenly it's okay, everything's okay. $26 is going to be a big issue, I think, for us. We're going to have to see that re-break. It is very important from 25, maybe 25.70 up to 26, that area. It's a little bit of a range, and maybe even as low as 25.50 right there. That whole region is a big concern for me. But, and this is where I'm going to go with this, I think that this is actually iterative, because the module used to drop it here, which is of course just a cat ear, was used again. And this is where I come to this like, oh, well, it did something really weird down bottom, didn't it? Yeah, but it didn't go anywhere. I think it's the same thing, right? So what I'm looking at is like, well, what happened on the rebound low? And is that possible? Is it possible it's going to replicate that? And this is hard to do because this price action is so minuscule, it almost seems pointless. But remember that, and I'm going to get rid of this. Let me put this on the chart real quick. I'm going to get rid of that area. I just wanted to know where the 618 was. So I'm going to look at where this went to. So initially it just blows up, right? It goes all the way through the top. You can see it came back to that floor, and now it's sitting on this one, which we had marked off yesterday, thinking that that'd probably be a good buy entry if it jumped here, but it never jumped here. It just went back down. And we saw it wick up and drop through, and that's kind of where I ended the day. I said, I don't know, we'd have to see it jump up and over, it'd have to bounce out low, and it didn't do that. It just kept going down. But here's where we would find some kind of consolation, if you will. So looking back at this, yes, it's a wedge. Yes, the 60% break on that wedge is 23.26. Part of me thinks that's about as high as it goes today, especially if AMC kind of finishes off up top here and doesn't really go much further. I think that at GME may get like one more leg up. I'm not convinced it's going to go through the top just yet. We'll see. You never know. Fridays can be big, and it's had enough downside. It certainly could use a good green day. We also haven't done anything to like break down out of the current uptrend. So no one's saying that. Not saying that that's going to happen. I don't know, but I'll be watching the volume again, and this volume's very, very high off the bottom, and now it's like extremely light coming into this top, which is good because it's trying to be sold off, right? We've got a little bit of a creek that's formed now. That's a resistance is what I mean to say, and it's going this direction. So there's certainly a bent here towards, and that's not even like, that's about halfway through the day. There's certainly a bent here towards not really advancing super far just yet, maybe consolidating here. Once you make that creek jump, it could change things. But regardless, it seems like there's a decent concentration around $23, down to about $22.75. And that makes sense because this is the area that was contested coming down, right? So naturally, if you're going to get hung up somewhere, that's probably where you get hung up. Here's the good news, okay? This, as an iteration, represents something that could be quite positive because if you go backwards and you look at where it did this previously and it left that marker, we had talked about that marker being left at $30, and there's a good chance it was going to not just leave that alone forever. Well, that is the contested region up top. Now, this is very steep, the drop downs and all that jazz. So it has this very flat, because it literally just dropped through on that ear. I'm looking at this like, well, I already had it drawn out, and it was this guy right here. So I didn't, think twice about it at the time. Still not thinking twice about it. But this is essentially like the region that was the most contested region. Again, right there at like $30. That's positive news because, again, this isn't guaranteed, but the iterations did indeed break up. So if we were to look at what happened here on this buy-in and came back through that floor, backed up, and then ran again, without going into high detail, right, you could see this as a very similar build out. And the floor being really far up there. We're talking about like $28. And that makes sense. 28 was a contested level. So it's right there on the second gap. Some kind of a deeper backup, perhaps, and then potentially running up again. Now, after that point in time, I don't know exactly what happens, and I know this is like long-winded. You're like, well, that's way out in June. Again, I don't know exactly what happens. Right now we have we actually do have a trajectory. These are important, okay? When we look at stuff upside right, you've seen me talk about cat ear stuff, and you'll hear me say things like, this is the last known cat ear, right? I'll say things like that. So this is going to be an important marker in the future. These trajectories are very important, like the last bits, right? The last couple places that are hit tend to signify some kind of a major breakout moment later. And almost always you can go back, if this is there, you can go back later and find that, yes, it indeed was very important. Like this, for example, it signifies some kind of a motion later, a range later that you may come into, right? Perhaps to do some kind of a break in consolidation or whatever, right? That area. It doesn't have to be right there. It could even be way over here somewhere, right? And even this, it's like, well, you had that thing drawn right there too. Yeah, that's where probable hooks are. If it passes through 26, it's very likely going to go all the way back up to this $30 area. So if it happens sooner, then I think this will happen sooner. And this is also like a massive drop. So trajectory is in our favor in this case. And no matter what you do on this S curve down, which is a pretty ugly one. See, I already have this guy up top drawn out. Screwed it up. Well, it's not going to want me to get it, is it? There we go. The trajectory down here is fairly steep by comparison to some others. It's 54 degrees on the current scaling, which is actually pretty accurate to what I drew. That's about 54 degrees. It's actually a little bit even steeper than that. Not much, but yeah, like 54.9. So it's pretty close. That's pretty close to what I drew out. And then I was saying just a second ago, like the cat ears coming down, we often use those little markers, the last little distributive upthrust. We use them to help us maybe chart it out, and it does work quite well. But the opposite is also true, and I don't always do it, but I always try to make note of it, that there's typically like a last, this is the trajectory right here. So I'm going to get rid of that. I don't need that. It was pretty close, so I'm not going to worry about it. There's typically like a last known trajectory, and these are important, as well. So these guys not only signify potential trends and the strength of the trend, but they also signify, like we just said, in reverse, like this kind of inverted cat ear motion. So although this isn't, like, again, meant to be like frightening or something, certainly looking forward, this could represent something very important later. Weirdly enough, like a breakdown, right, instead of a breakout. So we've got these two trajectories facing outward. They both, frankly, they look like they're kind of right in between, like they're splitting the difference between don't they? So this could be looked at as sort of an opportunity of maybe decisions, like you don't have to go this particular route this quickly. You could take some time going down, so on and so forth. I don't think it's necessarily going to fit it like a glove, but this is the best way, in my opinion, to start working on those projections outward if it's going to gain some strength. So, I mean, it looks pretty darn convincing to me that that's like right in the middle. So this is kind of the overall direction, I think, if it goes back up. Again, this doesn't mean it's going to break out. You've got some issues here. Certainly if this like pushed up and came back below, well, it's a different story, isn't it? And now you could be on this path lower where it's coming back down again. And we had talked about this previously. I'm not going to go into it again. So we've got some problems. This doesn't mean that it's necessarily going to go to the moon. This is also like the hook level. So, I mean, you've got a lot of things to consider when looking at this big picture that, yeah, it could definitely stop short of kind of a massive bull run or something in that area right around here. And that makes sense. But this is also the area that we would approach the top. And that's what I'm looking at today on the very small picture on GME, is it did go back up over the top, and that's a good thing. So if you look at where that little ledge is, I'll show you what I mean. You look at that ledge right there, and I don't know this is going to happen, by the way. I'm just doodling it. If it goes down again, it's probably going to head this direction right there. But if you look where that ledge is, it's at 2294 right here. And I've got this big bar in the way. But this came over that top, which is good. So it came over that drop ledge. It pushed back into that range. It didn't go too high. It didn't like go way high. This only pushes up to 2310, which is a really common level. I don't know if you guys remember, but 2310 was a level that I had on my chart on GME for a long time. I use 2310 a lot, so it doesn't surprise me that it kind of stopped there. It's in the area. Previously, this had gone up pretty far. This was like 2297, and this is even higher. So it didn't push over these highs from back here, and I think that's okay. And like I said, in some ways, it's better to go ahead and just do the first push and get the backup. That's almost always a better option anyways, because you get more strength on the move. The fact that it went into this like reaccumulation phase but didn't have a lot of volume right here, I'm okay with that. High volume tops where there's a lot of volatility tend to be very distributive. That's just their nature. So if you get a nice push up with high volume on the bottom and then it kind of slows into a low volume top, that's okay. Then you just watch for that backup, see if it finds support. If sellers don't take it down low and don't win, this is definitely a win for buyers in a lot of ways. I got to be honest, there's a decent chance here that some of this is short covering because this right here is so low volume. Like there's almost no effort at all. I mean, look at the effort put into the downside right there to drop it there. That's a lot of effort. That's good because it means it was being bought as they were trying to sell it down. It's a lot more volume in order to move it like just a few percent. And then almost nothing, it comes right back up. Very low effort. But the caveat to that is that this is really small, so I'm not as concerned about it. But the caveat to that is that you have that kind of an effect when there's short selling that's being covered. So if that were to happen, a lot of times it's off of a bottom. If this were all really low volume right here, I'd actually be kind of concerned that this is just shorts covering and that buyers aren't really buying, but it's very high. So I think, again, very positive pushback, more definitive, I think, as a low as a result. We definitely don't want to see an auto reaction here that ends in a new low. That would be detrimental, especially after that weird bar coding. But I digress. Point being, this push up with this reaction to the upside, to me, it bodes pretty well. I mean, there's a good chance then that this is actually going to try to push back over that 26 mark and won't get hung up there. That brings us back into the game if we can make that move. I would consider that a potential change of character. If it gets back above that 26, and we'll see what happens. Now, what is AMC doing during all this? Anybody's guess, I suppose, but we have possibility. At this point, it's very similar to the AMC chart, and so I'm kind of going back and forth on them, but in terms of like bearish and bullish. But we talked a lot about the opportunity for upside yesterday on AMC. I didn't talk a lot about downside on AMC yesterday. I think that downside here is kind of obvious. And I mean, it almost goes without saying. If you have a reactive move to like 335 and then it fails to advance, it's probably going to be a hook that then just distributes you lower. It's not very complex, right? So Monday or Tuesday, it comes up and then drops back below. Guys, like that's it. You don't have to ask any other questions. As soon as it comes back down through that new low, it's very likely that that's just continuation and you're just going to continue to distribute. That was your hook. That's your final ear, so to speak. These ears can be very long-winded. And in fact, I've suggested at times that they almost look like they're going to break out, right? And they go back up to some massive thing. That's why I have this fan going, because certainly to me, it's not even a question of could this happen? It's yeah, this happens all the time. You get this really extended move that almost doesn't make sense, right? It's that can be an ear. Well, that's an obvious one because it's super low. It's a clear hook, little gap fill, and then it dies. There's others that are less obvious. This would be a much less obvious hook right here, right? Most people would think that's just continuation. And I get it. They would think, well, it backed up, now it's just going to go for sure. No, that's not really true, because until it gets above this kind of rising ice here, which is the lowest that I could probably draw, aside from this guy, which I didn't do. And there's a lot of them. Remember, this is also where one of those macro creeks is, and I had doodled this before. My other chart's super messy, so it's going to explode on the screen. But it's right there. It's at 390 to 422. That's a potential hook zone, right? We were talking about this hooking on earnings, and it never did. Instead, it just went down. But I actually was very adamant that going down could be quite positive, because if you go down first, it may be less likely that you're distributing. I'm still holding to that, at least immediately. And remember that on balance is holding up really strong on the 4 hour. So even though my doodles look like they're way off, oh, I never went up there. I know, I'm aware. When we were looking at this, we were saying that it's kind of like a key pivot zone right here. And if it goes down first, it may not be all that bad, just depending on what happens after, because this could be a larger shallow S-curve, right? Where this is trying to bust down to go low, but then it's reversed, and that's a strong reversal pattern. So now you're talking about a bluff on a bluff on a bluff. Yeah, basically, right? So bluff on a bluff on a bluff. It is possible, and we've seen it before. It's not uncommon. In fact, the 2021 build out, that final push up and drop, which is sort of where we're more or less tracking due to on balance concerns, and because we think that AMC is likely going to have a spring and go to new lows before anything else happens. The same thing happens there. There's repeated up thrusts, they break down, and then once they break down, you do come back up, but it ultimately fails to advance. So this could come up quite high. I'm saying that the 390 is a troublesome area. When we looked at, and I don't know why I put this over here. It should have been next week. When we looked at the It's probably a time frame thing because this is the hourly. I probably did it on a like smaller time frame or something. I was messing around. When we look at the overall picture here, I'm going to get rid of this doodle down bottom. We see it. The 1 hour EMA is right here. We've got the 4 hour, which is, I think also like right above us. We just dropped it. And then the daily is actually way up high. It's up here around 390s. And in 2020, we went and distributed above the 4 hour twice. In this case, we actually pushed up to the daily once. We may go ahead and go up there twice. This could still be distributive. So 461 is not off the table, and neither is like 534, but it's a long shot, you know. It's like as if this wave has like one more big continuation in it. You can see the working out here of those up thrust, back up thrust, back up. They are getting longer winded each time. So the last one is kind of the one we're tracking right now. Is it going to go? Is it going to stop short? Again, almost doesn't really matter. Up is up, right? You just have to know where those stopping points might be. So when I look at this and I compare it to like GME, this makes a lot of sense to me that they're very similar. Granted, obviously this went into a breakdown, which isn't great, but beyond that, the motions themselves are quite neat. You know, they're quite similar in terms of their nature, where you would have that stop here based on that breakdown. That's still a huge move, but it doesn't go beyond, you know, like 31. That's very similar to what we're talking about maybe in this kind of a move, maybe even to 390. It's still a big move, but it ultimately doesn't come back above that rising creek. Makes sense? So it's not that different in this case. They're pretty similar. And likewise, if you did get some kind of an extension here, there's a potential that this goes quite high. I use the 50-50 a lot in my methods because it tends to be pretty accurate for breaking things into sections, and I just like that. But I think that you could look back on this and suggest that it's probably fairly similar. There's a similar range motion here. The differences are there for sure, but I would just suggest that it's essentially the same thing. You look at where that drop down is, and it went down to like right here. That ledge is right at like 28.54, and you can see that the high would be like 37. That's very comparable to what we're seeing here on AMC with that whip around. If you measure it out to where that ledge is, it's right above the top. So we're really coming up with kind of the same things. And 35 was definitely the target that I had, but 37 was another. You might say, well, why not? If you're going to go there, why not go higher? Well, there is higher markers because if you go to the next drop, this actually takes you up to like 42. So there's some possibility here for some pretty deep extensions, I suppose, on this drop that go pretty far. I wouldn't ship it and say, oh, it's definitely going to go there just yet. I'm optimistic that there's a possibility. I'm optimistic for certain reasons. I'm pessimistic for other reasons. One of the biggest problems, in my opinion, is still this 26. I think if you build 26, you get a higher push here, and that's required. You need the higher push. You have to come above the tops here at like 31. You have a chance then that this backs up and goes again. And I've mentioned this before, and I said it, I think even yesterday, when we go back, and SPY just like took off right there for a second. When we go back and we look at 2024, and we look at that May top, no, this isn't the same area. I'm aware of that. No, it's not the same. We have a different, president. No, it's not the same. We have whatever, different economy. You can say all kinds of different things. I get that. This is not in a vacuum. We have to understand that. But when SPY and IWM were making their last leg up, it's quite literally like the 11th hour. And I know I've repeated this a couple times, but it's worth repeating because there's a sense in which you might say, well, that's already happened, Booksy. Because, look at where this had gone to the top. And, we're coming into May 15th right here. It's the same area, right? Oh, maybe something like that. Well, AMC did have a breakout. I just took a little longer. This could be it. This 27th could have been like the peak area, and it's already coming down, right? Possibly, I don't think that's impossible. This obviously was contrasting because this is going down into the 27th, so on and so forth. But if this really does truly have like a last little bit in it, and I've contested a couple different times that both of them seem to have a little more juice left. I think IWM came to this widening, but now it's over like the next one. See that? I think it's got another push in it before a deeper pullback. So I'm trying to say, like, this makes sense as a cross, and if it goes up again, it would come down quite a ways, probably break this trend, but it would have that last little push in it, very likely to come to like 220s. This is what I meant to address. When you look at it last year in that May push, the big one, by the time it ended, and remember, this is going slower this time. AMC went in like 1 day, so it's going obviously slow-mo. There's certainly like this backup period that's going on right here when AMC first starts running, but this is the final leg. And AMC had some upside, is what I'm trying to say, before then, but it wasn't like a lot, right? It just kind of built out a bottom sort of like back here, almost like it was delayed. Not quite a month, but 15 days or something. And then it goes up all at once on the 14th, 15th area, 13th to 14th area, and comes down on the 15th, 16th area. This is when IWN actually peaks on this kind of build out. And in the grand scheme of things, it's weird because the Russell 2000 wasn't even going to like a new high. It was just kind of finishing off this run up. And that's basically where I am right now. I'm like, I don't know, man. It got really close. If I were trading call options from like way back in the day, I probably wouldn't care. I would be out and be happy. And I might be looking at a really short-term one just for the extra. I wouldn't be like pushing my luck here, But on the grand scheme of things, I'm like, could it go again? It might. This didn't really push resistance per se. It kind of came up to this peak and just sort of sat right underneath it. I think that there might need to be a push of resistance here. And again, it's not coming to new all-time highs. It's not doing anything like that. And it's not even coming back above this top from February and January. Right? It's just sort of a reset. And that's kind of where I'm going with this, is like that January 7th area. I'd been saying for a while there were two zones. One was the January 7th. The other was March 4th. March 4th was like the first one. That's right here. And we met that. January 7th is the second one, and we haven't met that. And that's the one I'm looking at. I'm like, yeah, that's where that extension went to, all this other stuff. I don't know if it's going to go way beyond that, and I wouldn't even bet on it, but I would suggest that is where we want to go. Like, that's been the target most of the time here. So I'm looking at it like it's probably going to get there. And that last little leg may just be that last big bump we see. And again, I don't know if it's going to be that perfect. Now, I've done this 3 or 4 different ways with iterations and yada, yada, yada. We got the $4 call out pretty easily, and that was long term. We've been talking about $4 since way back here at at earnings back in February, right? And you might say, well, it already got to the 7th, Booksy, on AMC. And you'd be right. It did. Or got very close to it. I mean, if it didn't get it, it pretty much got it. That's how I'd leave it. This is, again, that same target area. And GME did the same thing. It got to that 7th area, Now, what else is there? Well, there's not much else. The next one up is this 415 area. Again, I think if you got an extension that you were trying to distribute again and you wanted to just kill some time in the same range but not really advance, you could probably go to 417 or thereabouts and just do a second distribution, a UTAD of sorts. More like on the point, I suppose, 407. That's the level I kept saying. I kept saying weird numbers. I don't know if you guys heard me saying 405, 406. Because there's little numbers in here that weren't actually right on 4. 4 itself wasn't the one I was really looking at. But Did this go above 407? Yeah, it did. So again, I've been saying for a little while, it's possible it's just done. I don't think you would want to look at this and say it has to go any further for sure. It's possible it's done. We're going to get a hook and it's over. It either comes up, dies early, or it goes up even farther and dies early. But it's not impossible. I don't think that this comes up again and goes even a little bit higher. And I've been talking about that quite a bit in the last week or so. And so I'm looking at that. I'm looking at like the bigger picture. I'm like, yeah, it would make sense. What causes that to happen, Booksy? I don't know. You just said it was on weakness. I know it is. I'm aware. I'm telling you, like, right now, the market it's already been advancing on weakness. It's been advancing on weakness since about May, like beginning of May. Once this moved up, happened in like the 9th, it was already, the strength indexes are already going the wrong way. There's nothing about this move right here that's particularly great. You see a lot of sellers in the top. Volume's not really anything to write home about. It's kind of average to slightly high. That's the same on SPY, So I'm not sitting here saying that this is really bullish and it's going to keep going to like 700 or something. And IWM is going to go to new all-time highs. Like, that's not what I'm saying at all. I'm just saying I think there's a final leg. I'm repeating myself over and over because somebody will come back because they listen to like 3 seconds of this and they'll say, you said this. And I'll say, no, no, I said this, and that it wasn't meant to be a bullish call out in that particular way. Now, some tickers are going to do better than others. We know that. This isn't like a universal thing, right? But I am suggesting that it seems very likely to me that this buy up happens to some degree, and the same for AMC to some degree. I'm not convinced it's necessarily going to go way beyond this top. So hear me out when I say that. It did make, I think, some form of weaknesses in this drop already. You'll notice I drew a bit of a wedge here. I found this to be kind of curious. There's a widening if you look only at the basing here. If you look at the peak, there's a bit of a wedge going on right now. Now, the way I drew it, it's kind of weird because I'm like going through this top here at like 4 instead of going through the buying climax. I'm looking at this as distributive action, this 1, 2, and this is like the true peak. And that, I think, is a better wedge. But it is a wedge. I think that's kind of curious. So what you can do with a wedge is, it doesn't matter which way you draw it. Just make sure you're going from 0 to whatever the 618 is, not 1 to the 618. Where that breaks out, you could have a 62% move. So if it breaks out, it's probably going to do so here. And it may be lower, I don't know. But this gets you back up to 382. So this is very much a kind of a comforting mess, because this is consistent with what we think might happen if there's a bigger hook value, that this comes up to near that 385, 382 level. Doesn't necessarily go all the way up here. We know that. Could stop short. That is very consistent with a wedge breakout target, which is always nice to see. Okay, that's not above 4 again, but it is high, and it is a distributive action. If that occurs, then I would have to say that on balance, volume is not going to necessarily skyrocket. The measurements we took for that were quite bullish. I mean, they went really, really far. And they had more to do with like widening and like kind of hitting these peak angles on trajectory. I think that's a bit much. At the time we were doing it, we're looking at where were those lows. We weren't sure. I believe that the middle marker, yeah, it's right here for now, which makes sense. It's pretty much right where that breakout happened. If you look, it's right where that breakout happened on the cat ear, but it doesn't give you a good or a great, I should say, trajectory. So what I did is I looked at the one above it and the one below it, which are this guy and this guy. This highest one is kind of the most extreme. This one was based on, I think, that gap value, but you can't even see it now. So I'm not sure why I did that way. Man, these are all over the place. Looks like I didn't anchor these correctly. Should have been here. Go back in time. Correct yourself. Can't do that. And maybe just been a different time frame too. This is a 4-hour chart. I may have been looking at something else. So anyways, this seems about right, these two. And I don't think I would go way further than that. So when I look at this, you might be asking, what are you doing exactly? Remember, that's the wave schematic. Okay? I don't really want to have to draw it every time. If you guys don't think I need to, I won't do it. Who are you kidding, Booksy? You're going to draw it. You do it every time. It's so boring. I know. The wave schematic is that you get a 50% reduction on this side, right? And that middle marker right here is like a projection. So it tells you generally where the direction of the stock would go if it rebounds. It could be very, very high, right? In some cases, if the price action is high. I mean, this is not the way that sine waves are always working. Sometimes they work in a pattern that's a little more irregular, like this, right? And what it does is it gives you an idea of like what a rebound would probably do. So the 50-50 may not ever come back down to the same level. That's okay. That's totally normal, right? I'm pretty good at eyeballing that, aren't I? This could suggest that you don't actually go to new highs, right? That's kind of the story behind the story. Versus something else, which might be even more extreme, and this does happen sometimes, right? Where you get this backup, and it's rarely like perfect. I'm going to do it like right here. It's rarely like perfect because, again, I don't look at where is the 50% marker and then exactly where does that go. I really look at where they marked it off. Institution traders, where does the market want that trend? I don't really care if it's like perfect because at the end of the day, if there's clear cat ears, like that's what we have here, right? We have some like cat ears. They may not go through that perfectly, you know? So I don't always think that middle is like the answer, but yeah, if this sat there and then it broke out, you might say, well, this could go significantly higher. All we're really doing, and it is an estimation, because again, we don't have confirmation until it jumps these other creeks going down. But all we're really doing is very simple. Very, very simple. All we're really doing is we're defining like a parallel. Usually what ends up happening is that this ends up making sense for some other reason like that. Again, I've gotten pretty good at drawing this, obviously, but like this is one that you would say, oh, it's actually just a wave, Booksy, you know, you don't have to make it like complicated or what have you. It's just this. Yeah, I know. That's why when we, yeah, I know. When we go into the, that sounded snooty. Yeah, I know. When we go into these bottoms, really pay attention to these trajectories out, and why sometimes you'll see me map them and then you'll see me like bring them up and check out where they're going later and see if that makes sense. Like this one makes a lot of sense. Like I just did it again right here. So that lower cat ear trajectory, I was just talking about that on GME, ends up running a pretty good parallel to this cross. You think that's an accident? No, it's not. The market is doing the bid and the ask in a certain way. This is a mechanical market, so there's a lot of machines involved and algorithms involved. This, to me, is not accidental. It's just the way and the nature of it at the time being in our current age. But this also gives me a sense of like, oh, well, does that mean there's potential for more? Yeah, and this is where we start running into these issues of like, hey, look, there's the 461. It should show up. Like if the target shows up because you're doing something and you're doing it right, and then you replicate it with another technique that's, again, correct, it should show up. So this gives us evidence of both the 422 and the possible, 461. Now you might say, yeah, but this didn't actually hit that low, did it? No, but where would the low be? It would be dropping through here down to like $2.99, $3. Well, that's consistent with what we saw previously. We talked about where are those ranges going to be? Where would we maybe find a stop? That's an easy one, right? 3 is easy. 290 something, 298 is what I said, I think. It's right there. Everything works together in the market. If you're looking at the right pieces of information, you're going to find that it just kind of clicks most of the time. That does not mean, just because it's clicking, does not mean that it's going to pan out, because just like there's upside potential, and that's the upside potential here, right? The greater two upside potentials, in my opinion, are 461 and maybe 420. Those are the higher ones. I would not go as far as to say 534. Some people might, and who knows, but that to me is like ridiculously high. Those are the higher marks. The lower marks are also valid, right? So we did do these, but it already hit that, like we said on the horizontal, it already hit that 7th mark. What about the lower marks? It should make sense, and it does, that if you're going to kind of stop short, maybe it's like off of this top right here. I'm looking right there. There's a transition. It's actually right between, I don't know if you can see it very easily on this chart, but it's actually right between this bottom and top. So in this case, they don't really click, do they? They're not really in the right spot. So when I look at it, this is actually more or less where I'm looking, right there. See that hold and then that drop. It's a bit higher and a bit lower. A bit higher than the bottom, a bit lower than this top. This presents a whole nother trajectory, right? That's actually being used currently as well, because they use that on the rebound, right? So it could be a stopping place. That's probably like the early hook at 330. That distributive action could stop there. But the parallel that we're looking at right now, I would put it here since it's between the two. It's kind of even distance between the two. That's the next one. And that does give you roughly that 385 area. That's that intersection. So we're seeing a lot of consistency. And again, is this a predetermined outcome? No. This is just like targets. That's all it is. They're completely just numbers. Think of them as just numbers, not like you're looking into a crystal ball. That's not what you're doing. You're just looking at numbers and saying, this is a likely target if this breaks. This is a likely target if this breaks. And this is a likely target if we get this reaction off the bottom. Then we can look at other stuff like indicators, etc. So if the market goes into a bit of a bump, maybe by Tuesday, since Monday could end up being a down day, is it possible that this is where the distribution is trying to happen right here? Oh yeah, it's possible. Oh yeah, totally possible. Which iteration is that, Booksy? I don't know. At this point, I've kind of lost count anyways. I know that the bottom one worked out pretty evenly. This is the next one up, I think, is right here. This is probably this one. So the next one up would be this guy. And that does make you think, oh, it's going to go really high. But the truth is that at this point, I don't really think the iterations are as important as just the big picture. And just recognizing that, like, all right, it's great if you have that. It got you to 4. That's wonderful. But then beyond that, do you really need to keep doing that forever and ever? No. At this point, I think you're really looking at the next setup. And I would suggest to you that if that's the case, if we are indeed a bit correct about that, we're really talking about this right here, which is this top and this top right here. And those two being like kind of the main markers down. Just like these two, you have this kind of directive sort of sideways and up a bit. These two are more downward, in my opinion. It doesn't really matter how you draw it. You know, this certainly gives you the evidence to come over here if you think it's going to widen. But I would suggest you, like, looking lower is probably smarter. And just considering, like, if this iteration is meant to lay you up and distribute here, this iteration might be meant to lay you up and distribute here, because the formation here really starts on this weird double up thrust, that flush that we had, the double flush. This is a weird marker, and I've said it for a long time. I keep saying it. It's one of the strangest things. But now that I've seen it, it's weird how your brain, or I think it's strange, maybe it's interesting, how the brain starts seeing it other places, at least for me. Because once I saw it, I was like, that's super bizarre. I don't know what to make of it exactly. At the time, I just thought it really signals more distribution than anything else. And that proved to be right, but the longer term. But the motion itself is so odd. And I've noticed it more and more on different tickers, that motion and what that might represent. And I still don't know very much about necessarily like every little piece of what it might represent. But it does seem to me that that anchor is very significant. And when you look at these two tops and where they ended up going long term, this might be why we're getting this like high target, because it is part of this parallel. So there's probably bulls out there who are looking at this kind of double top marker and thinking we're going to get there. So there's some kind of a directive input, right? That someone wants to get to that place, you know. I'm going to try to anchor it, but they may not be the bull operator. So we might be seeing like echoes of that, and we might be thinking that that's the main operator, and it's not. It could just be some other fund or a group of funds that keep thinking, well, we're going to go there, and this. So the trajectories keep like pushing you that direction. We want to get back to this point to sell shares or do whatever. What's curious is that when you look at that then on the big picture as an anchor where that middle is, especially off this bottom, and even going back further, this does run through the hole. I don't know if you can see that very easily. It really runs through the hole. I think this actually goes back to the middle. It does, right there. It goes to this wick. And this is the one that I said a long time ago. There's two spots. One's at like 540, which ends up being like our top, right? The other is up here at like 613 or something weird. Some weird number up here, like that drop ledge. And those are the most likely places that are the center, quote unquote, of this big range. It's in this pocket area right here. This is, I think, probably going to be best described as the top of the range by most. So it looks like it's a pivot almost from this original drop in to this lower half of the range, not the upper half, which hasn't even been checked yet. This area. This is the one I think we're going to end up doing our reaccumulation in between like 11 and 6 way later. Or not way later, but later this year. I think we'll be back up here after a spring. But right now, we've spent all of our time beneath this marker. So this kind of makes sense that this has ended up being like a distribution. It's kind of a directive distribution, which direction we're going, so on and so forth. It may even pan out. I know this is going to sound weird, but sometimes you see this on the big picture. It may even play out that this ends up being like where your final spring drop is. You know, you come down to like $2 or something, 215, 236. Hard to say, but it's very possible that this actually plays a big role in that. It certainly seems to be playing a role right here off these two bottoms. That certainly is the same angle as well. It's hidden in there. It's a bit obscure, but you can see where that initial support was and then the takeoff support. Everything else is kind of just a dip to check liquidity. That's why I thought we might come back and look at this double dip through here, then it breaks out right there. Seems pretty reasonable then that might be where we end up going down for a spring, coming back up later. In fact, this is kind of cool. We might even be able to determine to some degree. I don't think we're going to be able to determine it. It's probably going to be like way later if that's the case. It'd be like next summer. Yeah, that figures. I was wondering about that for just a second. Well, not going to deal with that right now. Point being is that this probably is going to be a determining factor later on as well. But I'm just kind of showing you that I think that's probably where the distribution would be more likely, is anywhere above that marker, you know? So again, this gives you evidence that like, sure, what if it came up and filled the gap, Booksy? You think that's possible? I think it's possible. You know, I think it's possible this could open up. I think the gap's quite high because I think it's at 5, what is it, 520 or something, closed at 520. I mean, it's possible. I don't know why you would need to, but like you could. Like, I just don't think there's any real point to it, but that's me. Like, you're going to come back up later anyways, so who cares? The one thing that this will largely define in the future, this move right here, is going to be like a backup point later on. And I would venture that if we did some kind of a reversal here, the 618, yeah, we've already hit that. That's right where the 618 is. Look, 417, it popped up again. That's the 6.5. What do you know? There it is. So really, Booksy, you could skip all of the work that you're doing and just do fibs, right? Since you're just doing some really bizarre geometric calculations to determine where those fib levels are, I should just do fibs. Maybe. Maybe you should. You shouldn't do what I'm doing. I don't know. But yeah, this makes sense then. That if this is a 618 hit, and it is, that you could come back and double bottom there or dip slightly below it. I think if you dip below it, it's a stronger sign of strength. But we did already make one, which is from here to here, a sign of strength. So there is a good signal already on the chart. Another one gives you kind of evidence that you might come back up. I wonder how slow this is going to be. Yeah, this could give you evidence that you might come back up again and really define that trend. But I was going to say is like later, what we found is that ends up probably signifying like a halfway mark. So in the future, when you come down, if you come down to roughly a halfway mark, wherever that distribution happens, which already looks like it's going to be a 4. So let's say you hit, I don't care, 215 later, and you go to like $4. You're like, well, that goes to $8. That's like nothing, Booksy. I know. I'm aware that doesn't look particularly great. But remember, like big picture wise, there's other things going on. We can go into that. What we found is that retracement later ends up being quite significant. Now, sometimes that retracement's like a 618 to 786 retracement, and that would be a much higher extension. This seems very likely to me, even that it comes up to near the top at 12. That makes sense as well. So you're starting to see like a consistency in retracement levels. Like, okay, so if this goes to $2 and then pumps to like 12, you've got an easy 618 retracement back down to wherever this is. This is created like a floor, so on and so forth. It'd be better for us to have it go higher now as opposed to staying at 4, which is what happened in 2020. It goes higher because then the retracement, I think, the creek is now higher up. It may not seem that significant, but it is quite significant in the long term because while again, it may not seem super significant that this is where it is, the truth is that again, longer term, you really want to have a good backup to the creek. This never quite made it. It does come up to here, which is fine, but this doesn't really connect, sort of like the higher point there. I think that the higher it goes, the better. And ultimately, this motion right here would have been a stronger backup. However, right, this may have taken us too low into the range and not been a proper SOS with a backup. Okay, so it's a bit confusing. My point being is that when you look back later and you check out where that 50-50 is, it doesn't necessarily define the top here, but it does define where you end up 50-50 away from that level that you're trying to break over. It's like the anchor point. So this marks off like a halfway point, and then that slingshot gets you back up to that place to trade in the future. So would it be better to be higher versus lower? Pretty straightforward. It's better to come a little bit higher. And remember, this actually came back into that range area quite a bit, almost halfway up, but very far. Very, very far. Halfway if you go to this point, this bottom to this top, it is exactly halfway. Well, why can't we just do that? Just measure some top bottom area. We've done it. We've done it a few different ways. We've already done that. That's why 461 seemed like a really smart level. to me, is it was extremely it seemed extremely likely. There was a lot of really positive math that came out of that. And if other numbers were okay, it's not like you couldn't do it, but I was just going what I was like, all right, this one seems the best. And I argued it was 461 was the most likely candidate. So yeah. So we'll see. This to me is very significant also. And I'm not going to go beyond it, just to say, again, just show you one more time. Like, I know it's different where we are now. It may not exceed the top, but just to come up high and really pump that on balance before a massive drop down, I think you need it for this spring. We have propped up on balance quite a bit. So it goes without saying that hopefully that you know that you're aware the on balance already has come up quite a bit. And it is technically looking like it's distributing along this 44 million, which, I mean, this has been a spot where it's been before and like had troubles or whatever. So it already looks like it's having some issues. I think it's going to bust through and go potentially all the way up to 53. I feel good about that because it's hit that twice. And I think there's a strong case to be made that we're going to see what the strength is here and where that buy-in actually wants to go. I'm not sure this is enough, in my opinion. We'll see. It's tough to say because it has the same trappings of price action, which is that you could have like a hook right here and just not go up. So, and you could also have like an S-curve, although this S-curve is super weak if it is one. Doesn't drop very low. It would drop you low enough to get back into this range, I suppose. So the trappings there are kind of the same, but I'm arguing that I think that push would definitely propel you into that 51 million. And if it goes to 461, I'm going to be watching this very, very closely. So get used to it. If you don't like me watching the on balance volume every day, get used to it because it's super significant. It looks like the divergence is gone. It did come down lower here, but it does look like a shallow S-curve. It really does. If it has that reversal, it's going to be a decent push. Yeah, because it's very close. Very close. It's like this guy, you know, where you see that like breakdown happening and you think, well, it's just going to keep then crapping out. Well, certainly there's a possibility, but the fact that it caught where it caught in this grand scheme of things and like the angle of some of these directive moves, it's just very different. It has that propulsion still. This was already in a downtrend. It had already broken down. This is not. This is still like holding up. So I think that gives us reasonable cause to not assume, but to, which is saying that you know, but you don't really know, but to infer because we know the data suggests that when we're still in an uptrend, if it does this move, it tends to be a lot stronger. It doesn't tend to just be a hook. And we're really going to find out. Push will come to shove soon. How do you figure out S measurements to February 2026? We could do that. We're actually positive on the daily, blah, blah, blah. We could get a lower low, 380 or even lower. We won't get a UTAD on AMC this time. It's a big run if a positive. It catches up. I disagree. I would say go back to 2021 and see if there's a correlation there. This doesn't look like a UTAD. This is still like a huge run right here. From here to 461, it just looks like a new high. That doesn't look like an upthrust after distribution. But it is a distribution with a move. And the truth is, if that upthrust then results in a breakdown, it is an upthrust after distribution because the distribution started at 4. So this is just an extension above. it'd be like going back to maybe something like this. You know, I know this is a clearer UTAD. This does go over the top and then drop. This is very similar in some ways. This is an example of one that clearly just has like a barely move above the top and then drops back through. This is really ugly. But this is kind of what I'm suggesting. There's another one that's more volatile that I always remember, and that's this guy right here. And I just can't shake this because this is very similar in terms of like, and this one, by the way, very similar in terms of like how it builds out above that EMA, and it has this big run up. And when it happened, it didn't look like a UTAD, but then it has the breakdown instead of holding right here, and then it drops. And the same thing applies here, where again, this looks like some massive move incoming, and it ultimately is a similar kind of a setup where it's trying to get back to a certain level. This is even a better example because this is such a massive drawback, you know. And yeah, it was still in an uptrend, but it had made some weaknesses multiple times and widened out. This is a big move. I mean, these are huge moves. This is a massive move from the bottom. Almost 100%. Nobody's saying that that's not a big move. It is, but it's ultimately an upthrust after distribution efforts. This is just a bunch of upthrust right here to go back up and get back to this range where they're selling off, right? Even if they go really far into that range. So I'm not in agreement that it necessarily means a big run happens. I have to disagree with that. I don't know what happened in this particular area. You know, obviously it's a bit different because this is, again, the same kind of idea. It ran up really far. But when you look at something like the on balance in this region, I find it to be very peculiar how ridiculously far this went. If you look at this on the whole, this is looks like a huge move incoming. It certainly looks positive. This was a bit negative, perhaps. It was already in the top. I'm on the 4 hour, so... Yeah, look at this. See, this is bullish. This is already up above. It's positive on MACD on the 4 hour. It looks like a massive move to the upside. It goes as high as 2 on here, which is these previous tops. But it doesn't run, right? And when we do run, we're actually running from kind of like a weakness. It doesn't... play into its that idea here is like, well, it crossed up on the spring, but that's down here at 1067. It spent like 12 more days down in that lower region when this is like bleak looking. So I'm not convinced. I'm not trying to be argumentative either. I'm not convinced that really matters that much in the grand scheme of things. That's a perfect reason to have a lot of people FOMO, which is great. I would genuinely be surprised if it went and it didn't make a spring at this point. For this to be a kind of LPS would be pretty phenomenal. I think it'd be a great experience because we haven't really experienced that before. But I don't think that it makes a lot of sense in the grand scheme of things because we just didn't. I'm not saying we go super low either. I'm just saying, like, it doesn't make a lot of sense to me. We didn't go through the lows. We need to come back down through 244. To me, this looks like a phase B bottom that's generating like a new creek this direction. Like this way, somewhere. And that creek is going to be used on the exit so that when we come back later, you know, we actually hit that creek roughly. So if it goes to like... this wave up is advancing, but then it needs to go down for the spring and then break that area. So we come back up later. That's why I'm saying it presents itself as a good opportunity for a shelf once you've made that next advancement to have like a retracement that's quite deep before you start a reaccumulation. Again, most likely in this region from like 8 down to 6, which is not what people want to hear, but I've already made that argument as to why I think that's the case. Now, this is obviously early. I think if it goes to a spring, that's not going to happen till about August. But I've made this case before. I don't know the future, guys. I could be wrong about this. If somebody else is correct and it just rockets, great. Hopefully we're well positioned. We make money. You got some long call options or something, or just shares, whatever you want to trade. There's no need to be like combative about it or anything. You know, I'm okay if I'm wrong about something. I'm wrong about things every now and then. All the time, you're always wrong. That guy's gone. I don't know. I haven't seen him in a while. Maybe he found a YouTuber that he likes, I guess. Another analyst. That would be nice. I hope the best for him. Or he's just quietly listening and chuckling right now. This motion right here, to me, is like defining that major drop down. And that's as far as I want to take it right now. So I'm not going to go into big macro stuff. I will answer the question about the how do you figure out S measurement February 2006. Well, I'm going to give you the shorthand version of it, and it's not going to take very long if I do it that way. But the shorthand version of it is it's very simple, right? Because when this went down, where did it stop? Like, it stops here. So there's obviously like a resistance here, and then it drops that resistance. This, by default, created some kind of a trajectory upward. Bulls were trying to go this direction. It didn't go, and then it dropped, right? What you find is that when you go backwards, this almost always works this way, is that it's coming from like a pivot point, because this would be maybe a way of describing it as a fib fan or something, right? So this is the directive motion. So this is the simple way to do it. This is then a sign of weakness to some degree. All right, now we couldn't say that maybe back then, because you may have even not seen that, because you would have been using this as just a flat bottom or something. It isn't until, I think, really until you take off that this might take better shape. And I'm using a big picture view here, so when I zoom in, it might be a bit off. Yeah, there's a little marker right there. That might have been helpful. The other two areas, there's one right here where it took off to that upside. And then clearly when it came down, these two regions, there's a little buy-in, sell-off. This is a cat ear right there, and then there's a little sell-off. And then this is the buy-in before the big move up. So yes, was this there in the beginning? It was, but it was pretty well disguised. I think it would have been tricky to see. I don't always notice these things. I try to pay attention to them for long term. That's why I was saying you should watch those cat ear kind of things at the ends of ranges, because they often define direction. The same thing applied here. You know, if you look at that last cat ear, did it ultimately define direction? Yeah, you know, even in like the smallest scale it did. Here we are, right? So these aren't things that you should ignore just because they're smaller. The devil's in the details, right? So what I do here is I look at that and I say, all right, well, there was clearly like some kind of a stopping point right here, and then they use 3 distributions to drop it down, hit on that again, and then it reacts lower. So I think we're pretty close to where we think it should be, because we can see the double bottom reaction right there, and then it goes into a sign of weakness, and then it comes back through it, and this time it uses this like a spring and a final up thrust to drive the price back through. And it was kind of a fake out because it looked like it was gonna jump the creek and hold. And there's all kinds of stuff here that was kind of weird, but it was a really good fake out. I mean, it was smart. Everything about it like looks kind of bullish, and it could have been, I suppose, in a different universe, something different had happened, but it's not, right? Ultimately bullish. So this ends up being a pretty important marker like later on. And we're coming into that zone right here where it's going to play a role. maybe 461, I don't know. Maybe 450, who knows? Something like that, okay? Point being that when I go back and I look at things, I only look at two areas typically. I look at this area where the drop ledge is. That's important. I do that on the micro all the time. I just did it this morning on GME, like multiple times, right? We looked at that drop ledge. We said, where is that? I do that all the time. I also look at the cat ear. So there's one right here. This one's pretty significant because it comes through it, I think twice. Does like a little micro jump right here. And then it goes into like a second ear top. And then it drops. So this is all like one cat ear. This would be one way to look at this and suggest that this could be like a future directive, potentially. I think it's probable that this goes through that same point, actually, right there. And that's probably about it. I would look at those, and that's as far as I'd really want to go. Maybe this goes a bit higher, There's certainly some evidence that could be the case like that, but those are the markers I look at because they signify like walk downs. So this is like a walk down through a downward motion because bears won out in the end. But there was a walk down through an upward motion here. It was just not the best because this upward motion is the same one they use frequently. All of these are the same. All of these upward trajectories are just parallels. So unfortunately, these guys don't give us a whole lot of information. Like this was when I did the father of all charts. I found like a lot of these parallels and looked at the parallels and looked at the structures there, and yeah, you start seeing some connection between that and like what's going on here. But I don't find those to be particularly useful because this isn't a particularly bullish setup in that way. If it were higher up, I might use some of those more readily. Like that longer term, that could have been a trend up. Right now, it's way too extreme. Doesn't really make sense for me to use it. So I don't think that really makes any sense, right? So this is the one that broke down right here. Again, looking at those fan markers, so on and so forth. All of those could be used, right, to determine an S-curve, but this is the main one. Then what's left is kind of figuring like, well, how far does it go? There's two different ways to do it. One is to look at this really long term and say, well, this looks like it's not going to end till 2026 or something. And that wouldn't probably be wrong, but this implies that you're going to come back up to like 179. It's not a short-term reactive move. And again, this is like 2027. We found that on GME. Like several times, that the 2027 area seemed to be probable, for upside. The problem with this one on AMC, and it is an issue, is that this has a shift value. So the biggest issue that I've run into is that from this point forward, the market shifted. So the nature of the S-curve feels disjointed. Feels like you've got two different setups. As on the one hand, it's easy to say, well, maybe it just goes all the way back up there. But on the other hand, you're like, technically this shifted down. And I think that's very relevant. Some people won't care about that. I do care about it. So what I'm looking at is like, where did that happen, right? It's pretty much on the day of. You could go to that gap zone right there. It's not going to be visible on the weekly. But it's a 226% shift. I don't know why I did it there. Should have just kept it on the 4-hour daily so I could see that gap. It's a 226% shift. And yeah, it should be right off of that bottom. It's right there, the August 23rd area. That shift value is important because it's basically like a no man's land type shift where you're not necessarily ever going to go back through that. I don't think you could say that reasonably. You definitely have to go back through there. So whereas before I may have drawn out an S-curve maybe a little more bullishly and said, oh, I think it's going to go all the way up to 176 or something. And this is like the middle of the S curve, and it's going to come back up there. I don't think you can do that anymore. I think you have to take into consideration the nature of the shift, because it changed the value. The valuation, market cap wise, is the same. I've talked about that, but it is different, right? So this waveform, as we would analyze it, and that's pretty far. I think I did that wrong. Should go to this guy here, like that. I don't know. Anyways, so these waves are adjustable. You can determine what they look like. So you got to keep in mind, like, those pivots could be extremely biased if you're not careful. They could be very, very biased if you're not careful. These are ultimately like probably pretty decent markers to use, the ones I already have on the chart. Breakdown and rebound markers kind of thing. All right, now this suggests that we're coming into a bottom and that we may be hitting upside soon. It doesn't really tell you how you get there, right? And also, you're like, well, that's 2027. That's not 2026. Where'd you get the February 2026 from? So here's the deal. When this came up, it actually has like a double bottom, and we already know this is technically the lowest point. This would be considered like a sign of weakness long term. But if you were to invert this and you looked at that the same way, you would say that that ultimately was like a 10-month stretch or something like that. You could kind of take that into consideration going backwards from this particular date on the breakdown and suggest that it actually hits like a high earlier. And I go to that point and usually ends up being like right around February 2026, March 2026 on this measurement. I'm not going to fret about it. That's a possibility. The other possibility is, so that there's certainly a strong possibility, is what I'm saying, is that there's some kind of a high that's hit, and then this actually does come up later, but it may not actually come as high. So that's a possibility. The other thing that you could say is that really this S curve isn't determined by the original bottom. It's actually determined by the breakout point. Again, these are different views for different reasons. And I have reasons for doing either or at different times, but likewise, this is one that you could do. And another thing you can do is you could say, well, I actually don't think that the middle is there. I think the middle is where it hit the middle, not where it passes through the middle. I like to use the creek breakdowns myself. I think they're better middles usually, which would be the one right after the judge's earned decision. But I have at times flip-flop between the two. And in the past when I've done that and kind of done that flip-flop between the two. Also, one of the reasons I like this one is because the reactive move basically comes up and like catches it right here. And it seems to be very, very clean in the middle. I just like this one a lot. So I think this is going to represent like the first move here. So I've been trying to say, and then there's more to it. But we have the other possibility that it's one of these 2 points or even in the middle of this range. So I've done that before as well. Technically, this is a shrinking iteration, and that iteration stops shrinking here before the drop. So it's kind of strange. This is like an outworking of it. So there's just so many different ways to analyze that as a middle. And if you take it from the center, it even gives you like completely different date, like June. That's another one that's come up, June 2026. What I've noticed on the whole is that they're pretty consistently they're like 6 months apart basically. But the reason for that is because this period is so long, it divided it into like equal parts. So it almost doesn't matter how you measure it. The middle ends up being like 6 month segments. Now that's a long time, but that's because we're messing with really big dates. You know, these are not like short-term waves. These are huge waves. So on the one hand, it's like, yeah, this looks like February, March 2026. Somebody else might say June. Somebody else might say it's actually January 2027. I don't worry too much about that because at the end of the day, I know that what happens typically here is that the first thing that happens is that you're probably not going to come all the way up to the top. So like I wouldn't have said anyways, this is likely going to come all the way back up to here in one go. It would be like a two-parter kind of thing regardless. Okay. The other thing I would say is, well, again, depending on how you measure it, this guy actually has a peak over here in November of 2021 when you do this wave. And it's strangely different because this peaks early, which means that you could be getting there before then. It could be as early as like November of 2025, right? If it's 2026, you could have a sideways action or consolidation. This certainly matches almost one-to-one. I didn't do that on purpose, by the way, but it is there. That was pretty great, wasn't it? You guys are like, what? How did you do that? I don't know. It certainly matches that idea, right? That you could end up in this like spring action and like be rocketing up there. It looks very neat and nice, and it makes you feel all comfy and cozy inside. And when you look at it, again, big picture, you might even suggest that this is kind of what you think is going to happen. So like originally I looked at this and thought, well, that's definitely a possibility. Go back and you use a wave here, or excuse me, you use a trend here. According to the way the chart is, this does give some pretty strong evidence, you know, that it would be around this time into February. Let's try again. Hopefully it works, because if not, it's going to get rid of it. All right, well, the signal quality is poor for some reason. I apologize if it doesn't get better in a minute. But do you see where this comes from? And like the reason it's kind of confusing is because, again, a wave is not the same as like points. So the wave here doesn't have a middle that's on one of these lows. I think we've talked about that 2-year cycle that happened from like May to May. That 2-year cycle is great, but it implies that the middle is, it kind of looks like in the middle of nowhere, you know? It's like basically on this peak, that's the middle, which is very strange. So is that the middle of the bigger wave? Like, could be. You know, if this is the crossing point, then that gives you like a wavelength that's kind of like a 2-year, 1-year cycle. Really simple. It's possible that that's the middle of the wave. You can kind of keep that ball rolling, and you find that there's some strange things that you can do with that, you know? So yeah, I mean, if it took off right now, I did the exact same thing. It could be there in November and then be really that February is where it's breaking down. But, you know, we start looking at wavelengths, it's like, man, I don't know. This could be, it really could just be like a May to May to May to May to May thing. And this just kind of keeps going, I guess. You could keep going on that for forever, I suppose. That idea anyways. We should use the time thing. I don't ever use that. It's just an easy way to do it, I guess. But it gets off somewhere. It just doesn't seem quite right. Anywho. So you might say that this is 2 lengths, this is 2 lengths, but then it messes up. And then this is 2 lengths, in which case it's pretty much done right here in May. 2 lengths down, 2 lengths on the upside, 2 lengths on the downside. It works. So this is 2 legs down, 2 years up, 2 years down. It would be over now. Well, how does that play into an S-curve? Again, it's a little different because that is true. Like, this is a true thing, right? It's true enough statement, I suppose. But if we thought that this was going to come back up in May. We'd been wrong. It didn't come up in May. It was a good estimation, and we're a little late. We're a little behind. Maybe we don't go down again, right? That's what heel toe is saying. We just kind of break out and go. But remember that the S-curve itself, which is starting here, doesn't, or we think starts here, doesn't actually match this. It's off. So you could take the same length of time, maybe that 3-year cycle, and drive it forward in a different way. It seems pretty close to the same. I mean, based on what we're looking at, there's definitely things here that are kind of interesting to stare at. I never really looked at it like this May to May thing. It'd be funny if, like, in the end, it was really that simple. It's just every May it does something. I mean, it is right there in May. That's the same kind of push-up. But it would also suggest that we missed the boat, right? This next May is down, and this one was already up. But another way to do it might be to look at this as an S-curve. And again, this really is quite fascinating, because look at that. That's kind of incredible, actually. I've never done that before. I find that to be a bit ridiculous, to be honest. But that, he was like, what? Well, I just did the S-curve measurement. I told you how I did it and why I did it the way I did it, like this, in this case, from the breakout through the middle. Well, look at the measurement on that cycle and look at from the bottom forward, and it also gives you that evidence that it goes here. If you go from that breakout forward, it does the second one here, naturally, because these are 1-year cycles. That's a year apart, right? So it's like one or the other. But it's funny how, like, this one's January, this one's like March. So it would not be unreasonable then to suggest that if this S-curve starts here and it's doing this, I guess, 3-year cycle, that the S-curve would terminate here in March to the upside. That actually gives us maybe a better picture of why this is taking the time that it's taking. So maybe that's something we could kind of hold on to as well. Again, what's the problem with this, Booksy? If you think that's the case, why is there any issue at all? Isn't it super simple? It is, kind of. Wave, wave, wave. That's the reactive wave. The problem is the shift, right? This works very well when you consider this as a reaction that went up and touched that wave, like we're still kind of keeping tabs on it. It doesn't work very well, though, with the current price action because it didn't even get close to that. So then enters the issue of the shift, right? So when you do the chart shift, the chart changes quite dramatically. This does look like the correct area. It breaks through the middle, right, where that gap is around the Judge Zern / the reverse split, another split, ape conversion. There's all kinds of stuff that happens right there, right? It certainly works pretty well. I don't see anything completely wrong with that either. I think it's a good assessment. But it's different because now, instead of the resistance being up here, where you're thinking like, I'm probably going to go up and check this range first as a first stop. So let me put it this way. Let me use like a red. This is why the chart is the way I think it is in terms of being different. Instead of coming up now and, hey, we're going to go back and retest that bottom and that top, which is what happened back here. We went back and retest the LSPY area. So on this wave, that's exactly what we did. We went back up, retest the LSPY area. Why wouldn't we do that right now? Well, look at where this section sets up on the... this gives you evidence right here that, yeah, you'd probably come up to this pocket right there. That matches really everything else quite nicely. But it doesn't work as nicely without the shift. The shift gives you the evidence that that's very possible. And then the second leg would be coming up to this area right here. And so you've got this really clean, potentially clean anyways, 50-50 kind of motion through the tops that works quite neatly. Like, it really is almost 1-to-1 with what happened last time, even just looking at those levels. This would be wonderful. This is what I've said repeatedly, is what I think would be the aim, would be to come back and check this bottom and top area. But this bottom, this top area. But the problem being what? Well, we have a big chart shift and it's not really building out on those same levels anymore. So instead of it working from this bottom, now it's working from this bottom right here, right, which is closer to the bottom on the lows. Instead of trading across this middle range in the middle then, which makes some sense because there's nothing really traded here unless you consider ape. Instead of that, you could potentially be trading low. And I've talked about it frequently because the numbers are not adding up. The speed at which this was going in 2021 is just really rapid fire speed. The speed we're moving right now is kind of like a snail speed. The angles aren't the same. I don't think it's accidental that they're not the same. It doesn't matter how you draw them, folks. They're definitely correct, but they're not the same. Now, you might say, well, maybe you're just using the wrong angles, Booksy. Maybe you're using the wrong things. Maybe it's that one or something. Maybe, but I'm just going to take the chart for what it is because I think it could do something different. It doesn't have to be exactly the same. And I think a lot of it makes more sense because of the liquidity levels that they left open to trade this area in a reaccumulation. And it seems to be the directive because there's been very little evidence that they've set up for the top. It just, aside from that gap, which had already been filled, there's almost no evidence that you would trade the top above here. It's bizarre to me. Like, why would you come back and trade this and then leave this big gap? Unless you plan to come way down later and get it. And I guarantee you, if that skips, it's going to come back later to get it. I'm going to just go ahead and say that. And I don't say that often because I think it's dangerous to guarantee anything. But if they don't trade this area between like 550 and like 750, I would put money on it that it's going to come back there in the future. It just doesn't make sense why you wouldn't. So the more I looked at it, the more I was like, the way this is setting up, it's really setting up to trade, in my opinion, like here, which is quite low. But it's more consistent with what we see locally in the setup. It still works the same. It still does the same thing. But the difference is that this is now like significantly lower. And again, instead of coming up to kind of get to that top, really just maybe coming up to get to that $20 area. And we've done this a few different times. It's possible this still hits. I'm not saying it doesn't. But like I said, I've done this several times. And every time it's a bit different. And one of the things that really gets me is that wave being truncated low. Because if this ends up building out low, which seems to be the case, again, just kind of looking at the direction of the movement, doesn't seem like you'd be above this, although we could. It seems like you'd be below it, and that you would trade this area instead, which to me makes a lot more sense anyways. Then the next move is not that far. And this is where I think people are going to get kind of irritated, because if the low is where it is now at 240, this would suggest that you really don't go much beyond like 25. For example. Well, that's not up here. So what happened? I don't know. Well, what if it goes lower? Well, if it goes lower and it does hit the 190s, you've got a chance that this could come quite a bit higher. Well, what if you're just wrong about that? What if, right? The questions just keep going. They keep piling up. The folks that use fractals are going to just take that and slap it over here and call it a day. They're not going to look at these angles that have been developed and consider that it didn't actually do the same thing. They're just not. All right? And I'm considering that it's not actually doing the same exact thing. It's a little bit different. And I've been talking about it for a while because the problem with this, in my mind, isn't that the measurements are wonky or wrong. They're there. They're working fine. They just don't work according to the past fractal. They work really well with what they've got in front of them. You know, the timing of this is pretty spot on too. Near May this year, you're going to start hitting these markers. We're just thinking that they're going to go for a spring so they can get more juice on the move. Some people think they're not going to go for a spring, okay? But on the whole, the main problem isn't that the numbers themselves are like way off, right? It's that when you start looking at this as if it has to rinse and repeat, you're basically thinking already that it's going to go up to some number, 125, that probably won't happen because everything's been shifted, unless you just don't think there's a chart shift. But I do. Yada, yada, yada. Okay. So what this presents itself as is it presents itself as a possibility that at some point in the future, this can get between 43 and 52, but it's likely going to use that as a stopping point if it does get there, which makes sense. When I did it the other way, not too long ago, I found that there was a lot of contributing evidence that suggested we don't even go that far. And a lot of it had to do with the first move and where that buy-in is. I'm kind of just throwing it out right now. I don't have it in like the perfect spot, for example. This should be around August. But we did this and found that there was a decent amount of evidence that we actually leave from like 6 something. And that would suggest that this is actually significantly lower. And that's a different whole nother conversation for a whole nother day, right? But we had this kind of concern that like, well, based on some of these things that we're looking at, this could actually end up being quite low. It may not even make a new high. And then it could be leaving from near that $6 mark. And it has to do with varying degrees of this and that and the other. And I don't want to get too deep into it. And a lot of it was because of what I see as an arc that's downward and not upward. So I could probably find that chart, but I don't know. I can't even remember exactly where it was at this point. I'm sure it's somewhere nearby. But it was like, man, it was like 640 or something. It would have been like out here for part 2. I don't even know. I'd have to double check. You might get a little bit annoyed with me because every time I do this, things end up being like slightly different. But that's also a good thing because, I mean, you don't want it to be like I'm just copying and pasting everything exactly the same. It's good to analyze it. Kind of fresh. Anyways. This is a really simplified view of it too, but anywho. You get the idea. So it isn't that I'm bearish, it's that I'm trying to understand maybe the directive movement here in a way that makes the most sense for numbers, not just because of a fractal, not just because of a trend. And then also there's a sense in which some of these things are wildly consistent and a couple others are just not. Like this is one that I find to be very interesting. We've talked about this before. There's a parallel structure here. This is one that's really consistent. It goes back to like this original downtrend and breakout like way early on in the stock's history. And then it goes through the spring level basically right here. Now right now I'm marking it off like it's going through the second bottom, not the last bottom. But this was very curious to me because that is where the gap zone is. You see that gap right here, right before May? It's like this gap zone level, and it goes through the gap and the spring. And if you go to where we are currently, it went right through the gap. It's like right on it. That's a technical anomaly that probably shouldn't be ignored. should it? So that would suggest that this downside's not done until it hits this bottom, which could be in the 190s if it does it by earnings, right? It's possible. That gives you a lot of time. I mean, and we've done the measurements every other way. So there's some things that are like super consistent, like you find the same answers every time, kind of consistent. There's other things that are a little less consistent and that tend to yield different results depending on how you measure them out and such. I like that line too. I don't really look at that one very much. That one's really good. And then this is the one that kind of gets me more recently. This guy goes through this gap right here in that top. I really like the idea of a spring in this particular setup as opposed to just going up. So if this were to pump to, I don't know, I said I wasn't going to do macro stuff and then I did it. That's me, right? He said he's not going to do macro stuff. He's going to do macro stuff. The idea of this being like a gnarly, crazy sell-off is absolutely the case. I mean, it would be really, really bloody. But that's what a spring would be. I mean, it would be a terminal shakeout to get everybody out that they want to get out. And it's not just retail. It would be other operators as well, you know. Operators that they don't really care about. They don't really care to see them in the play. People that jumped on the bandwagon right back here. Yeah. So one of the things that this angle brings about, this again is a question of like, where is it? So this has this intersection during the timing that you have where this intersects pretty neatly on the top. And in our current time, it just doesn't go that high. So there's a lot of question marks I have about that. Like it's pretty low by comparison. It's funny how like perfectly this works too when you look back on it. And how clean that is. It's like super clean. That motion right there. But when you look at it in our time frame, I mean, it's just not that bullish. It's not aiming for these like moonshots, you know. It just isn't. We can use like the more like we use like a wider angle view of it, or we can use like a tighter view. Really make a huge difference to me. So yeah, I mean, this is an aside today. I didn't mean to do all this, but there it is. Well, that's just not the same. And again, it really suggests that you don't get much beyond the 28 area. That's not getting you to where we thought it was going to go on this S-curve based on this angle. Why not, Booksy? I don't know. I didn't make the chart. I didn't make this angle. Something in this showed some weakness, probably the reason why it didn't go up again. I don't know. Even though it had this massive volume buy-in, something about this is just a little different. And I go back to it every time. I'm like, there's got to be, you know, there's got to be some path to get up to like 50 still. But this changed it. I just don't know what to tell you. Like, it really did. Just changed it. So another thing was the measurement here. I think we've talked about this before. I believe it was like this final breakout area through that first peak. That ends up being the measurement to the top. And I think we did this as well. We did this a while back. And this is how I got August. And I was saying that, man, it's kind of slow. It's like July 11th, August area. Everything was like way out. It was not in June, which is why I was saying I didn't think June was going to result in the actual squeeze moment. That's yet to be seen, I suppose, but it wasn't a May-June thing, that's for sure. This is not it. Could be the setup for it, you know? Anywho, so this would suggest that at most you could come into this range a bit, but I think, again, this was a huge overshoot, potentially. Hard to know what else that could represent at this point in time. But I would suggest that probably better just to keep it really simple. Maybe suggest it doesn't come through halfway. And that doesn't yield a massive result. It kind of comes up to here, like 1060s. And maybe a little bit higher if it leaves later. But the consolidation would be, you know, probably dipping down into this low area and then leaving around 7. So I'm like, man, I don't really know if this is going to be like an October move or something crazy. But it does seem like it starts in August. That would be really bizarre, wouldn't it? Maybe it just takes a long time, you know? I've got it really fast. Maybe this is just super slow in the end. Yeah, so my theory, if you will, is that this is actually more or less accurate. So whatever we hit, that's what I've been trying to say, like I think wherever we hit this time is a representation of probably close to, if not right where we're going to be coming back down to later. And this has to do with the wave here because it did something similar. If you draw it out that way, down to the bottom, like kind of passes back through that area. How should I draw this? I don't know. That's a whole nother question mark. Done this several times. And every time I'm like leaning more and more into like, it should be closer and closer to that gap, not these other markers. But there was one time that I think I said I thought it was like September 6th was very likely one of those markers. I don't know, man. There's so many different ways to do it. That one looks really good. That's August 23rd. So if you do August 23rd, and it's just a 2-year cycle, you could go to August 25th maybe. I don't know. That's really fast. It kind of implies that it would already be there. But then, like, how low? I don't know. Good question, Booksy. Good questions. No answers. Good questions. I don't know, man. I can't draw on an angle here on this chart either. It's sort of just eyeballing it and doing the best I can. You really don't have... TradingView doesn't give you an option to like curve this so you get a tangent, like a proper tangent on it. Tangent's like in a direct, most of you guys know what it is, but if you don't know what it is, tangent's like a direct opposite. It's like a T shape. So instead of it being running together, it's kind of running apart. It would be interesting if it didn't go for a spring. It just ran up into August. I think it would have to be a July run if it goes to August 22nd. July. That'd be weird. Well, maybe if it hooked instead of going up. It just went down into July. Then it'd probably have time to get up there and do its thing by August. There should be something else, right, Booksy? I don't know, guys. At some point, you just kind of get into the weeds and you start looking at every little thing. And like I said, some things highly consistent, some things are not. So it's great for making estimations, but at the end of the day, like, comparisons can only take you so far because everything's going to have some form of uniqueness to it. You're not going to have everything be exactly like it was the first time. There's going to be unique elements to it. So yeah, the reason I think this bothers me so much is this weird lapse of time here. Everything else is kind of the same. There's a strange like gap in time. Maybe it was because of the ape stuff. Or I don't know. Could be like this, where they were just waiting, doing the distribution after. It isn't a similar time, isn't it? Here to here. A very similar time. So it's not that the cycles were wrong, it's that the timing of the drops kind of brackets around them. Yeah, it's pretty strange how similar that is. Weird. That's the same. What does it mean, Booksy? I don't know. It's not like you could be off this way, because then this would shift the opposite direction. It's probably like a quarterly thing. Usually what we end up finding is kind of the same thing every time. It may provide evidence that this does go to a spring if it is going to move later in the year, because this was after the fact. It went into an upthrust or a UTAD, like moving up. After all of this is done, it goes up. That's a UTAD. It could be that after all of this is up, it goes into a spring. So that could give you evidence of a spring. Of course, it is right around earnings, so that makes sense. It's August 15th. Yeah. Yeah, that works. So like after all of this, it goes into a upthrust, right? That's what I'm trying to say. Maybe after all this, it goes into a spring. It's kind of the same deal. It's exciting times, man. It really is. I don't think a lot of people, maybe in the broader market, know what's going on. This has been a really long time coming, though. This isn't like a overnight thing. This is a multi-year setup. It's been a long time coming. That's $3 right there. See, I wonder. It'd be so much easier if I knew exactly where the end was, but I just don't. I think the middle is kind of the best you can do, and then you just have to take the timing for what it is. We're just not going to have the perfect answer here. But I'm willing to say that if it's not already up there, it's probably going to get up there around the 22nd of August. I'm being genuinely serious about that when I say that, timing-wise, because the August deadlines have been very, very tight. The August to August yearly things, and they're almost always on the 20th, between the 20th and 24th. But they've been like that for the last few years, so I would be surprised if they weren't. It's going down there, guys. Telling you, man, it's gonna be down there in August. That's the spring, dude. Really, all we're asking is like, is it gonna just kind of go up and just like start going up, or is it gonna go into a more volatile like final up thrust and then have like a really nasty reversal? Pretty much the same thing. Both of which would 50-50 around this point anyways, so. Strangely close, isn't it? I think it would do well to go back above it. I'm gonna keep saying that because I really do. I think if it goes down, that's like a sign of in the inverted land and like upside down land here. If we were looking at this and we thought that this was like a bull chart or something, we were waiting for it to go up. What I would be saying is that if it dropped again and it made a new low, that would be bad because we'd be saying like that's a sign of weakness, right? But in the case of this, it's actually because of what happened here. Pushing low again could be seen as a sign of strength. The question is like more or less like, do you need to do that? I don't know. That's not really a question I care to answer that much, but it would be very significant, I think. I just can't find any other piece of evidence other than what we've already found that this is like, we've kind of already done our homework on it. It does seem very likely, but there's nothing else that sort of proves it beyond a shadow of a doubt that's going to do that. But I'll be darned, that still looks really good. Now I figured AMC and GME might get a little stuck. It looks right. It looks kind of like what we thought. Didn't go up very high, but it's like coasting on that creek. It's come to the edge here, so we'll see what happens. Didn't even push up there yet. Alright, it looks good. Kind of went right between them, didn't it? But, I mean, it's on the edge here, so it's going to break down or it's going to run. If it breaks down, I'd look at it as kind of a spring-like moment. I think you're going to see it hop up above, maybe. I think it double topped right there. You could see that kind of a dip with that double top motion. I don't really think it matters. This looks really good to me. I think it's very bullish looking. GME doesn't usually do this pattern right here unless it's going to go. It'd need to make a higher high though. It looks good. So yeah, I would look at this as like a kind of like a UT in reverse and suggest that if it breaks, you're going to come back down and you're going to drop pretty far. You should come back to this creek. This is a simple way of looking at it. Maybe that about that far. I'm going to get rid of these extensions on these. These are not helpful. That one's probably helpful long term because it, again, probably goes to point to Hey, what's up? All right, I'm back. I'm about to finish up in a minute, but I had a phone call that I had to take, so. Yeah, I would look at that as like a breakdown, and then this seemed like I like to look at stuff upside down. I don't know why, it helps me a lot, but it could stop here. This is really the same thing we're getting at, really the same ideas. It's like, where would it stop, you know? Probably there. 380. Makes sense. That was the same level we got before, too. Yeah, I think this is going to go up again. Which I already said, like a bajillion times. Honestly, if it takes longer, it may go farther. I'm wondering about this guy. This idea of going to like 417. Curious. It's weirdly like right on that point. I find that to be interesting. That's all. Who was it? My wife. She's fine. Just checking about something. She needed to check something. She thought she misplaced something, but it's okay. Found it. All good. Life in the lower middle class America, I guess. I don't know. Yeah, this is always interesting to me because I feel like if you flip the chart, you get some really interesting moves. WLGS volume strike. I don't know that ticker. And then this level. And then it should kind of slowly pass through the rest of these. There's a bunch of them. This is probably where you get that weird kind of sideways curve. I would call it an S curve, but this is probably where you get a lot of that weird sideways action. Where it's more like this. That's the cat ear. Right? As you get this chop down through all this junk. That works. That's very, very reasonable. What about going to 460s? I mean, there's not much to say about that. It would just be like a really high extension. I think if it did something like that, we'd probably be looking at like a big term. It'd have to jump here. I mean, that's all there is to it. And then you'd have a big pump right to there. And I would imagine it would be fairly quick. Like, not very long-winded. Where does it hit the 461 mark? Just rebuild the chart. It went from macro to micro again. That's really soon. It's like Monday. Doesn't seem very likely. Well. Didn't I do this a minute ago? I did this thing a minute ago. Yeah, I did. I used this guy. But it wasn't actually that marker. It was like something else. No, I can't remember. Okay, I'm about finished. Yeah, I don't recall. That wasn't the right angle. Whatever. Something like that. It'd probably be before that day. I don't think it would be on that day. It did that. Like kind of a final move up. So that's way out here. It's the 30th. So, I mean, that's quite a ways off. It's a couple weeks out. It would work. It would work as a distribution for sure. Either to 417 or 465. Doesn't really matter. If it goes sooner, I don't know, there's a lot of like little things. This is the daily moving average, by the way. So again, look at where that is in relationship to where that top is, and where those intersections are. definitely a good bit of evidence if you were to come back through here. I should probably make that like that, so you know it's not actually happened yet. It may never come back, but if it did, that's where it would be. It makes sense. You don't have to delete the message unless you just put it on the wrong thing. You just want to delete it. Oh, there is something else we can do. I forgot. So there's always like a last creek. Yeah, look at that. There's always like a last creek that you go through. And then when it comes back down, if it distributes, it breaks back through it. This happens on every breakdown where it comes up and then it busts through that last creek. It's usually this guy. So this would end up being probably the most important, like the most important area right here. If it broke down. That's what I think is going to happen. I just don't know about this area right here. It's a bit questionable. And the middle, if it goes to 461 down to 197, is there, right at $3. Like exactly $3. Well, there you have it. Might be a little bit off. None of these line up perfectly. That's probably a little closer, 194. That's a flush. 194. And then the middle is here at 461. Yeah, there it is. And that gets you right to... That's what I feel 461 is the strongest. I know I keep saying that, but it's just super strong. Like, in a good way, you know. You can have a big retracement back down to that. I don't care. But then it comes back up. I just think that's a really good move. It also follows this trajectory really neatly. And there should be like a final trajectory that pumps it out. They don't normally leave it right here open like it is. Because I've been using these other ones and they're way too high. This one looks really solid. This is like a clean, almost 50-50. The other one was a slightly higher one that I used earlier, which goes through this like 354 mark. But this one's really solid. I think it's a really good one. I think that other one might be, again, like the extension. Yeah, that's where the extension goes. So if it goes up, that's like kind of the window of possibility. That's crazy how close that is. It's like right on the dot. So I would say that's like a distribution range. And at this point, I've basically rebuilt the chart. So thanks for taking my whole day up, guys. You did this to yourself, Booksy. Yeah, I know. Nobody told you to do this. But yeah, that's it right there. So that makes sense. Man, this is a really nice chart, actually. I say that a lot, but sincerely. This would be very, very sensible to me. Crazy. Numbers are tight, like really good. And I don't know what I feel about the rest of the range up here, but hey, don't do that. Don't do that while you're leaning over. Your body will think you're gonna vomit and just throw up. Did you hear what I just said? Yeah. Okay, don't do it again. Just keep in mind, like this to me is still not the run. I know you could probably draw it in a way that it goes up and just keeps going up, but I don't think that that's the case. I've made this argument enough at this point. I'm not going to keep making the argument, but I really don't think that's the case. So I just can't stress it enough, I guess. My problem lies in this kind of mythos of, I know it's a bit on the nose because sometimes it is important to look at indicators and such, but in the mythos that there's some kind of a perfect formula of indicators that gives you this, it's like indicators are great, but they're used very often in a misleading way. And even we're talking about like IWM and SPY being kind of down, and how it's like this is bearish, but I feel like that indicator could be used opposite too, to like trap bulls for like one more push, which is strange to say. But if you don't get to that target, you may just not get to it. Maybe it turned early, it's done. But to me, I'm like, I feel like there's something missing. You know, I'm sticking to that. Same with AMC and GME. It's like, I know it looks bad on the short term, but I think there's something missing. So this makes a lot of sense, though, that this would then come crashing back through. I find that to be very reasonable, this chart. It's not way out there. It's quite sensible. We can go further if you want and see if they've divided this into other halves. I think at that point, just kind of killing time, but you could take this down to that 50% marker and suggest, did it make that, is this a good 50% range for the first S curve? And it is, it's right here. That's where that red line is. So that's in the right spot. So again, you have a halfway point there for distribution for an S curve down. If you go to 461, you could stop right there and then drop again, chop through the middle a bit. And then the second one is 3 down to 195 or 94. And it's right off the bottom that we made right there. And actually, it looks like it might be right before the 239. Oh yeah, it is. It's like halfway between the previous bottom and the all-time bottom. It's right there. I think we're right, guys. I really do. I think we're in the right zone. And my guess is if it does this, this will probably be like the last big hoorah. Be a lot of chop here. Almost unrecognizable. And alternatively, I suppose if it didn't go up that high, you could come down early. And that's just another, kind of the same exact thing, but you could come down early and accumulate here into earnings. I'm thinking that it doesn't actually leave right away. And it has some kind of like a buy-in back up to 239. And it takes off more like around the 20th. Probably rips like crazy fast if it does that. Maybe the 18th. That would work. You'd probably end up having like some kind of creek here, some kind. Then you 50-50 up above that level. Come back down. This is a wrap around the middle. And then you reaccumulate, kind of dipping backwards underneath 7. I don't know about the rest of this. I'm curious, but we'll see. Because this is really fast, but then that implies that you're going to make like an October move. And I guess it's possible if this goes up above and then comes down. But it wouldn't make much sense for the wave thing that we did earlier. I'm going to finish up in a second. But like that, this being kind of contained, it would make more sense, I suppose, if it didn't leave until then, or near then, like February, or even closer to March, and really pushing up there, and then doing it sideways bit, like over here. All right, last line. You already knew that was going to be there, but I'm doing it anyways, just to prove a point. There it is. There's the final mark. Neat as can be, right? Right there. It's good. All right, I'm done. I hope you guys have a great weekend. Keep an eye out on GME, see if it breaks back above after this rounding top. I wouldn't be worried if it goes down again, like even one more time here. I'd only be really concerned if it drops through this low at this point. So not going back beneath like 22.32 would be ideal. But if it can bounce here, it's probably going to be pretty strong. And yeah, we'll see about Monday, depending on how the day ends. Appreciate y'all. I hope you have a great weekend. Talk to you later.